Hello, everyone. As the trading day edges closer on this crisp morning of November 10th, 2025, one particular stock is refusing to stay quiet before the opening bell. Dvlt AI, known to traders by its ticker symbol DVLT, is already stealing the spotlight. In early pre-market action, the stock is lighting up screens across brokerage platforms, hovering around £2.01 per share, a jump of nearly 19% from the prior day's close at 1.69. That kind of surge before Wall Street even opens its doors isn't just a random fluke. It's a signal that something major has unfolded. For many investors watching this name closely, that type of explosive move instantly raises speculation. Maybe the company just landed another massive AI-related contract. Perhaps there's a fresh patent announcement. Or could it be that retail traders are once again coordinating a short squeeze? But the real cause behind this latest spike goes far beyond those surface-level assumptions. What's driving this price action isn't new business news. It's something far more dramatic. Only hours ago, Dvlt AI officially announced that it has filed a lawsuit against short-selling firm Wolfpack Research and its founder, Dan David. This move marks the company's most aggressive step yet in a battle that has been quietly building since late October. The lawsuit directly targets the short report that Wolfpack Research released on October 31st, a document that sent DVLT shares into a tailspin and erased weeks of gains. In its legal filing, Dvlt accuses Wolfpack of publishing a report filled with false statements, misleading allegations, and what they describe as defamatory claims designed to damage the company's reputation. The complaint further states that Wolfpack ignored publicly available information, misrepresented facts, and deliberately left out critical context to push a bearish narrative. This right here is the heart of the expectation versus reality dilemma surrounding DVLT. For weeks, the market has been trying to answer one simple question: is Dvlt AI a genuine technology innovator building something revolutionary, or is it, as its critics allege, nothing more than an overhyped illusion? Today's lawsuit is the company's answer to that question. Instead of issuing another polished press release or social media rebuttal, Dvlt has chosen to take the fight to federal court. And that decision has electrified the stock's pre-market trading, as bullish traders interpret the legal action as a sign of confidence and a potential turning point in this war between the bulls and the bears. Let's take a step back for a moment. If you've been following DVLT for a while, you already know how chaotic this ride has been. The bullish argument has always centered on the belief that Dvlt AI is undervalued and misunderstood, a small-cap company on the verge of massive breakout growth. Supporters point to several headline deals that seem to validate that view. There's the $10 million exclusive licensing agreement with Celex Holding Company, a partnership that gave investors a glimpse of serious commercial potential. There's also the company's platinum partnership status with IBM, positioning it alongside big names in the enterprise AI space. And let's not forget the management guidance from the most recent earnings call, projecting a $25 million annualized revenue run rate by the end of this year and an ambitious $40–50 million target for 2026. This, according to bullish investors, is the story of a company that successfully reinvented itself from a legacy data firm into a cutting-edge player at the intersection of AI, Web3, and data monetization. But for all the optimism, the stock has also been brutally volatile. Despite soaring over 350% in the last 90 days, shares have dropped over 40% in the past week alone, largely due to the pressure following the Wolfpack short report. And that's why this lawsuit matters so much. Because this isn't just another PR cycle. This is a full-scale confrontation between a small-cap tech company and a powerful short-selling operation. When a research outfit like Wolfpack releases a scathing report, its goal is clear: to convince the market that the company's valuation is inflated and to profit as the stock declines. By taking legal action, Dvlt is directly challenging that narrative, and by extension putting the credibility of the short sellers on trial as well. Across online communities, especially on Reddit and Discord trading groups, investors are now fiercely divided. On one side, you have retail traders calling this lawsuit the ultimate short squeeze catalyst, claiming it could trap bearish positions and send DVLT soaring. On the other side, skeptics argue that the Wolfpack report raised legitimate concerns, suggesting the company's partnerships and revenue claims may be exaggerated. So, as an investor or observer, how do you separate noise from truth? Let's break it down into data-driven insights instead of speculation. First, look at short interest. Platforms like Finviz and Fintel show that as of the latest reporting period, 9.72 million shares of DVLT were being shorted. The borrow fee rate stood at around 10.7%, which is quite high, meaning short sellers are paying steep costs to maintain their bearish positions. That alone reflects intense activity. Next, consider the days-to-cover ratio, recently recorded at just 0.23 days. This figure suggests that, based on average trading volume, short sellers could close out their positions relatively quickly. However, that data was collected before the lawsuit news. If this legal action sparks heavy buying, those same short positions could find themselves caught in a classic short squeeze scenario, with traders rushing to buy shares to limit losses. And that brings us back to the key question. Was the Wolfpack report a legitimate warning to investors, or was it a deliberate attempt to manipulate the market? The only way to get closer to an answer is to evaluate the source, the evidence, and the response. Real due diligence means checking whether the claims in that short report can be verified using the company's official SEC filings and other public data. More importantly, it means judging the quality of the company's counterresponse. Any business can issue a one-paragraph denial, but filing a federal lawsuit, that's a whole different level of commitment. Still, there's a word of caution for retail traders. These kinds of setups, with lawsuits, short squeezes, and emotional social media hype, often create intense volatility. Moves can be violent in both directions. Those chasing the momentum might find themselves caught when the price swings the other way. To navigate this, it's important to go back to fundamentals. Strip away the legal drama and hype and ask, what does this company actually do? Dvlt AI describes itself as a pioneer in visualizing, valuing, and monetizing digital data in the evolving Web3 ecosystem. In simpler terms, they use artificial intelligence and blockchain technology to transform raw, unstructured data into secure, tradable digital assets. Think of it as creating a marketplace for information, where data itself becomes a financial instrument that can be validated, appraised, and exchanged. The company's proprietary tools, such as data score and data valuation, aim to quantify the worth of various forms of information, from financial data and intellectual property to digital likenesses of athletes and creators. This makes them something like the picks and shovels provider for the coming data-driven economy. They're not just selling concepts either. Recent announcements show partnerships across multiple industries. They've worked with Joysticks.health on blockchain-based pharmaceutical tracking and even struck a deal with Rodney's Comedy Club to create a Laugh Index, a system designed to timestamp and copyright original comedy content in real time. These examples showcase the versatility of their tech, spanning finance, healthcare, and entertainment. From a financial standpoint, Dvlt AI is in what can best be described as its hypergrowth phase. When they last reported quarterly earnings in August, the company recorded $1.7 million in revenue, up a staggering 467% year-over-year, exceeding Wall Street's expectations. However, it also reported a loss of 0.65 per share, signaling that profitability is still a distant goal. This is the classic high-risk, high-reward setup, rapid top-line growth paired with heavy spending to scale operations. Now, looking at the bearish perspective, critics, including Wolfpack Research, argue that this growth is unsustainable, pointing out that some of the company's deals are with smaller partners rather than major global players. They also note valuation metrics, such as the price-to-book ratio, which at one point was nearly 7x, well above industry averages, as evidence that the stock's price has run too far, too fast. So, where does this all lead? Over the next few weeks, Dvlt is entering a crucial stretch. Investors are bracing for two high-stakes catalysts that could determine whether this story turns into a triumph or a collapse. The first major event is the upcoming earnings report, expected around November 14th. This will be the company's first opportunity to publicly address the short report, defend its numbers, and potentially reaffirm or adjust its revenue targets. A strong report could completely shift sentiment and deal a heavy blow to the bearish thesis. The second catalyst is the lawsuit itself. While legal battles take time, any positive developments, like court rulings, settlements, or retractions, could cause another explosive reaction in the stock. But beyond both of those, there's a third long-term catalyst that's flown under the radar. During the last earnings call, Dvlt's management referenced the Genius Act, recently signed into law, which strengthens patent protections for emerging technologies. The company claims that major U.S. banks are already infringing on its patented systems related to data exchange and Web3 monetization. They've even retained a top-tier IP litigation firm to pursue potential licensing deals or, if necessary, file lawsuits. If that effort succeeds, the implications could be huge. Winning or settling even one of those claims could unlock significant licensing revenue, possibly transforming the company's balance sheet overnight. So, as the market watches DVLT rally in pre-market trading today, it's important to remember what's really happening beneath the surface. This isn't just a story about another small AI stock catching momentum. It's a company waging two simultaneous wars, one legal and one strategic. On one front, it's taking on short sellers and defending its credibility. On the other, it's challenging some of the biggest financial players in the world over intellectual property rights. The volatility we're seeing is simply the visible reflection of those battles playing out. The next few trading sessions, and that all-important earnings release, will reveal whether the bulls or the bears have the stronger case. Because in the end, this is no longer just a chart or a ticker symbol. It's a real-time test of whether Dvlt AI's technology, patents, and leadership can withstand both market skepticism and legal scrutiny, or whether the weight of controversy proves too heavy to carry. This is not financial advice.